For many people who invest in dividend growth, the main goal is pretty clear and simple. It's about slowly increasing the money you get from dividends every year. The aim is for this income to not only cover your regular expenses, but also even go beyond what you make from your regular job. This is when you attain something exciting called financial freedom. This goal is something a lot of dividend investors, including me, really look forward to. Surprisingly, some investors tend to make things more complicated than they need to be. Let's break it down. The goal is to keep building up your yearly dividend income. You want it to reach a point where it pays for all your bills and even more than what you earn from your day job. This is when you're no longer tied to a 9-to-5 job and have more freedom in your financial choices. It's something many of us are after, but it's important to realize that you don't have to make things overly complex to reach this goal. In this video, we're going to explore one of the best investment options for achieving this objective, a type of investment fund known as an exchange-traded fund, or ETF. Specifically, we're going to talk about an insane ETF that focuses on long-term dividend growth. We'll see how investing just $50,000 in this ETF can actually set you on the path to financial freedom, maybe even surpassing your job income. Before we jump into the details, make sure to show your support by giving this video a thumbs up and subscribing for more helpful content like this. Among a bunch of choices, we're specifically talking about one particular ETF, the Schwab U.S. Dividend Equity ETF, SCHD. Let's see how this ETF can help you get closer to that dream of financial freedom. Just a quick note, I'm going to keep things simple and clear. Investing doesn't have to be confusing, and I want to make sure you get the main ideas without any unnecessary vocabulary. SCHD's main job is to try to match the performance of something called the Dow Jones U.S. Dividend 100 Index. Think of it like a blueprint for how to invest. It's managed by a company named Charles Schwab. This ETF spreads your money across lots of different companies. These companies come from different parts of the economy, like energy, technology, healthcare, and more. And guess what? They're the kind of companies that often share some of their profits with their shareholders in the form of dividends. Here are a few key things to know about SCHD. It started on October 20th, 2011. Right now, it's got nearly $49 billion in total assets. That's a lot of money. The cost for investing in SCHD is pretty low, just 0.06% of what you invest. Each share of SCHD is trading at around $74. Over the last 12-13 years, the value of SCHD has gone up by a huge 185%, and that's without even counting the dividends. Remember though, just because something happened in the past doesn't mean it's going to happen the same way in the future. But looking back at how SCHD has been doing gives us some clues about how it might behave in the future. SCHD's main goal is to follow what the Dow Jones U.S. Dividend 100 Index is doing. This is like a roadmap for how to invest the money in the ETF. One cool thing is that SCHD likes to spread the money it gets from people like you across about 100 different companies. Some of the big players you might know are Microsoft, MasterCard, Visa, and more. These companies have a few things in common. They've been around a while, they regularly pay dividends to their investors, and they usually increase these payments over time. This means they're pretty steady and reliable, which is what most investors like. One impressive thing about SCHD is its annual dividend growth rate, which is like 7.113%. This rate shows how much the dividends might increase every year, even though right now the amount you'd get from dividends compared to your investment isn't super high. Around 3.5%, the combination of increasing dividends and the possibility of the value of your investment going up makes this ETF quite promising for the long run. Here's something interesting. If we look back at how much SCHD paid in dividends over time, we see that it keeps increasing. Over the years, the dividend payments get higher and higher. This is good news, especially when we also consider that the value of your investment could go up too. Together, these two things make SCHD look like a solid choice if you're thinking long term. Let's do a little experiment. Imagine you started with $25,000 and put it into SCHD. We'll assume the initial dividend yield is around 3.49%, and the dividends you get increase about 8% every year. The value of your investment might also grow around 4% each year, and you're going to let the dividends you get buy more shares automatically. In the first year, you might get about $850 from dividends, and your total investment might increase to $26,500. Jump to the 10th year, and your investment could nearly double to $50,000, giving you around $2,600 from dividends each year. Wait till the 15th year, and you could see your investment grow to around $75,000, with dividends of about $4,500 annually. As time goes on, the magic of compound interest really starts to kick in. By the 20th year, your investment might shoot up to $114,000, yielding dividends of around $8,500 each year. When you hit the 25th year, your investment could be close to $200,000, giving you dividends of roughly $17,000 every year. Finally, after 30 years, that initial $25,000 could have turned into an impressive $350,000, and your yearly dividends might amount to a substantial $37,000. This example shows us how powerful the combination of growing dividends and compound interest can be. By staying committed to reinvesting your dividends and starting with a reasonable amount of money, you're beginning a journey that can take you from small beginnings to impressive financial achievements. To sum it all up, the path of growing your investments shares similarities with a simple step, yet it can lead to big financial destinations. SCHD, as a solid long-term dividend growth ETF, captures this philosophy well. By understanding the strengths of both growing investment value and steadily increasing dividends, you're setting off on an exciting journey. This journey lays the foundation for a substantial income stream, which can support your ultimate quest for financial freedom. If you've enjoyed this breakdown, remember to give it a thumbs up and subscribe for more easily understandable content like this. See you in the next video.